Good morning, this is PJ Crescenzo, host of Mindset Matters with Team Crescenzo, and today we have a very important topic to discuss. Again, we're going to try to keep it brief, but today we want to touch on debt to income, which can other words be known as DTI, right? So this is probably one of the most important, common phrases thrown out by lenders that a lot of times consumers don't know what this means, right? They hear something about their DTI, they get different feedback when they're out trying to get approved for a mortgage. So what we want to do today is, in a very simple way, just break apart what is debt to income, right? What is your DTI and what does this mean to you when you're going to buy a house? So number one, debt to income, right? So there's two words there that are really important: your debt and your income. So if we break this apart and how this impacts your ability to buy a house, number one, a lender is going to look at first your gross income. How much income are you bringing into the household gross, right? So a lot of times, if we're looking at consumers, there's a misconception because when they're filling out a loan application, they put net. Because for budgeting purposes, we're going to look at how much money is hitting the bank account, and those are the funds that we're going to use to pay our bills, pay our rent, pay our potential mortgage. But in the mortgage world, the way the guidelines work is we're allowed to use your gross income, right? So very often consumers aren't aware of that. We use gross income, which is going to increase your purchase power and give you the ability to buy a little bit more. So that's number one. Number two is your debt, right? So these are expenses that are reporting on credit, and really that's probably 80 to 90% of the expenses that we're going to use. So we don't need to know what you pay AT&T. We don't need to know what you're paying every month to your fantasy football league, your heating bill, all of these utilities that come for what you're paying outside of what's reporting on credit. Those aren't going to be looked at when it comes time to get the mortgage loan, to get your loan approval, right? We're just looking at fixed expenses that are reporting on credit, number one. Number two, in a little bit of a smaller bracket, we're looking at legal obligations. So are you paying child support? Is it being deducted from your pay stubs? Do you have some type of repayment agreement with the IRS because you're self-employed and you're a business owner? That's the only other bracket that would really be incorporated into your DTI. But in most cases, it's gross income, expenses reporting on credit, and then lenders can run the number. So as an example, sometimes clients will ask me on the fly, they haven't done an application, I don't know anything about the profile, and they just want to say very quickly, hey, this is how much I make and where do I need to be? Now, we always encourage the client to do a full application so we can give a thorough and quality review of their specific scenario. But just to break this down for the sake of the video, so a client calls me and they say, hey, I make $48,000 a year, $4,000 a month gross, and I want to go buy a property with an FHA mortgage and put 3.5% down, right? So if that's all the information I have, the way I could structure that and give the client their max purchase power, just under the case of DTI, is I know for FHA, we can go all the way up to 46% of what their housing payment can be versus their gross income. So if they're making $4,000 a month, 46% of that is right around $1,840, right? So now I know their total housing payment can't go over $1,840 to be at the max DTI we need to be at for an FHA mortgage. So knowing that, I can now go back to the client and say, well, just based on this limited information with this income and this payment cap, we can't go and buy a house in this market for more than $260,000 to $270,000, right? So that's just a quick snapshot on how we can look at gross income, DTI, and help the client qualify and determine where they need to be property-wise. Now, in that scenario, that's assuming the client has no debt, no car payments, no student loans, nothing else reporting. We're just going off of income and housing payment. So that segues into the second part of DTI. DTI is broken into two parts. Number one is your housing payment, which lenders look at as the front ratio. So that is specifically just your gross income versus your housing payment. Now, for mortgage lenders, when we look at the housing payment, we're looking at your principal and interest, we're looking at your real estate taxes, we're looking at your homeowner's insurance, and if there's any HOA fees that are going to be due. So this is almost another video in itself. We're already at 4 minutes plus, and I really want to keep these videos condensed, but this is an important topic, so I'll touch on it. We do a lot of new construction purchases, right? So if you're buying a new construction house and there's an annual HOA, right? $700 due every July. Well, for the mortgage lender, we have to divide that 700 by 12 and incorporate it in as a monthly expense for the housing payment as if you were paying it monthly. That's just the way the guidelines work, and that's the way it's always been. So even though monthly, you don't need to budget for the HOA because it's an annual expense, almost like Christmas presents, right? Though you probably have a lot more fun getting Christmas presents than paying your HOA dues. It's just a one-time expense. You don't need to budget for it every month. But for a mortgage lender, we incorporate that into your total housing payment. So that's one portion of your DTI, the housing payment, right? And that's gonna be what we call your front ratio. In most cases, the max front ratio is going to be, depends on the loan program, but anywhere between 45 to 46%. In some cases, we can go all the way up to 50% of your gross income versus your housing payment. But as a really safe metric, 45% of your gross income for your total housing payment is a safe metric. So that's number one. Number two is your back end ratio, right? These are all mortgage lending terms. We're gonna try to break it down. This is your proposed mortgage payment plus all of the expenses that are already reporting on credit. So this is what your mortgage payment is gonna be, plus your car payment, plus your student loans, plus any expenses that are reporting on credit. So as a final note that I wanna touch on is, to the consumer, really the biggest misconception we see is gross income versus net income. You see loan applications all the time and somebody just puts what's hitting the bank account, but they don't put what they're earning, right, before taxes. So that's the number we're gonna use. The last point is DTI is extremely miscalculated in the lending world. I have seen many scenarios where a client is told they don't qualify, they're capped at blank because another lender told them so. But there's so many things that go into how DTI is calculated, and that really is all based on the income being earned. So as a quick example, right? Overtime calculations, variable pay, bonuses, commissions. If you have a new job, they might just be using your new job income, but they're not looking at the whole picture and giving you credit for all the income you earned previously for overtime and bonus. Social Security, the ability to gross up that income because you're getting it tax-free. The way we look at student loans, the way we look at collections versus charge-offs, things we don't have to hit you for, but that some lenders do. This is all just a quick, high-level recap on some of the things that can determine your purchasing power. So most importantly, you wanna make sure you're working with a lender that knows how to calculate DTI in the best interest of the client and knows exactly what they're doing. So I hope this was helpful and this was a good breakdown on DTI. Again, debt to income, there's two words there, debt, income, and it's one of the most important metrics you'll hear when buying a house. So I hope this was helpful. If you have any questions, just send an email to teamc@apmortgage.com. Feel free to subscribe below for the next video, and I hope you have a blessed day and blessed rest of your week.